Hey, what's up you guys? It's Kyle, and I wanted to make a video to let everyone know my thoughts on how to get started in investing. Pretty much universally, how to get started in investing in whether it's Bitcoin, whether it's the stock market, whether it's pretty much those two things. And I'm gonna really kind of gear this towards Bitcoin right now because Bitcoin is becoming the hot topic. And it's a lot of people asking how to invest in Bitcoin. But generally, this is a video on how to get started in investing for beginners. And one of the topics that I'm going to cover, the main topic, is dollar cost averaging. And this is a strategy to utilize for beginners. Anybody can learn it, and I wanted to make a video on it right now. Here's the thing. You need a strategy because when you first get into investing, people are worried about losing their money, and they are, they're wanting to make money. That's the reason for investing. So what do most people want? They want to make profits. They want to make the most profits they can. They want to, immediately see money that is being made on their money. They also have quite a bit of FOMO. The reason they're entering is because they have fear of missing out, as the case with Bitcoin we're starting to see. And, there needs to be a strategy to avoid that. If you are coming in near an all-time high, that you aren't totally doing a lot of damage to yourself. Okay, so now let's take a look at the first strategy of investing, lump sum investing. Now, lump sum investing, it's basically when you take all your money that you're willing to invest at that given time and you throw it into the market or buy some Bitcoin with it. Now, this only works if you time the market perfectly and you are at a all-time low, and not even an all-time low. You're just at the lowest point that it's ever going to be. And it just goes straight up from there. And that is very, very hard. So taken, for instance, that you were in, let's use an example, 2017, you bought into Bitcoin. And at the peak of the market, when you had complete FOMO and you bought in at 19,000, then it went to 10,000, then back up to 12. Then it went back down to 8, and then 3, and then 5, and then started creeping up at 7, 8, 10, 13, then 19, and now where we're at. You would have had a span of 2 to 3 years before it eventually went up to where it's at now, around 34, 35,000, and you would be in the profit. And you would have only gotten to the profit as of about a month ago because Bitcoin's been in a complete tear in the last month, and it went from about 20,000 to about 30,000. And what if it would have never came back? You would have been just hanging on to it and would have had to possibly take it at a loss. So this is not my strategy or technique that I really advocate for, especially as a new time investor. Now, the second strategy or technique is to be an active trader. Now, I have a lot of friends that do this. And the only thing, there are already all these people out there, they're scam artists, or they're just people making you want to, or trying to get you to pay them. And they're, claiming that they know the perfect timing and entry points and exit points to the market. And, that they're going to basically have you use this coin that's up to buy this coin that's down, and, or inflection points in stocks, and be able to exit it and buy back in at a certain level. I'll just tell you, especially as a new investor, unless you've had years and years of experience and you are an expert at reading charts and you've probably got burned in the past, you're not going to make money this way. Very rarely would you. And, it's not, and plus not only that, I don't know about you, but a lot of us have different jobs than trading. You're going to be having to sit at a screen all day and watch for these, or being able to actively trade your account, or even worse, you're going to have somebody asking you to give them money and they're going to trade for you. And that is just probably the worst. That just came to my mind. Don't ever do that. So that is the second technique or strategy of trading, and I don't really advocate for that at all, especially as a new trader. Okay, so the third technique is what we're mainly going to cover right now, and what is my favorite technique, and this is dollar cost averaging. So dollar cost averaging, what it is to buy in at different intervals, whether it's weekly, bi-weekly, monthly, and buy in at the same fixed amount. And over time, these little investments, whether the market goes up or down, are going to generate better profits and a greater return for you. Coinbase is a really good, and I'm going to give you a link to Coinbase below, that you can get, I believe it's $10 free of crypto. It is my affiliate link, so make sure it's that if you want. If not, I don't care, but Coinbase is a good exchange to use, probably the most popular, and they actually are one of the only ones that I know of that allow for automated dollar cost averaging. And I totally would, as a beginner, I would definitely suggest doing that, whatever you're comfortable with, whether it's $50, $100, $500, $1,000 monthly, and just have it fixed so you can set it and forget it. Okay, so now check out this graph from Cointelegraph. This will better explain it. If you would dollar cost average your way in from 2017 all-time high to the current prices, you would be at a 61% increase, as opposed to if you would have bought in all at once, the lump sum in 2017's all-time high to where the prices are now. So you would be at a 61% increase on your money today that you've actually inputted if you had dollar cost averaged your way from 2017's peak high. So this is where people ask me, hey, should I buy in right now? Is it too late? You don't have to buy a full Bitcoin, one. So you don't have to buy it at 35,000. And two, yes, it's not too late. It's a great time to purchase, because even if you're at an all-time high and then you buying on the way down little by little and you keep buying and then it turns and goes up, you will see how this dollar cost averaging strategy is much better than lump sum investing. Even if the lump sum does come back, you're still going to be at an average greater return in most cases with dollar cost averaging. Okay, so obviously this is a previous history, and past history does not guarantee anything with future results. I am not a financial advisor, so trust me, I am just a guy on YouTube making these videos that I believe, though, throughout personal example and personal experience. I am not just a trader, a Bitcoin trader. I am an actor, an entrepreneur, business owner, invest in real estate, have a real estate brokerage. There's many things I'm involved in. And you can learn about many different things. And there's a lot of times that I have learned through experience. So now I am not putting out anything out there that I don't 100% know or believe in or have experience with. My personal example is this. I had been introduced to Bitcoin around 2017. It dropped from about 20,000 to around 10,000. I think I might have bought in one full coin. Maybe it wasn't the smartest thing, but this is before I knew about dollar cost averaging. I bought in, and then it went up to 12. And I thought, wow, this is great. I hit it at the bottom. Then it went down to 8. Now I'm in the negative. Then it went down to 6. Then I kept track of it. Then I think I may have bought in a little bit more. Then it went down to 3. I left it alone. It came back up 6. And I bought in again. And then it came back to 7, and I was tracking it, and then 8. And then you could see the chart, the 5-year chart, steadily start going from a bottom to start inclining. And there is one tip. After I bought in at 8, it went to 10, and then it went to 13.5. And then I bought in more and more and more. And I've accumulated, I think, now it's over 11 Bitcoins. The key is, it was one person in passing that said this, and it stuck with me, and it'll hopefully stick with you. Don't try to catch a falling knife. Sometimes when you're seeing a full decline in a lot of things, in a lot of markets, and it's just going down, 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 and you see the bottom falling out, it might not be the best time to get in, because that hasn't hit a bottom yet. It's got momentum downward. And so as I was studying this and seeing this, now this was before dollar cost averaging, however, I had somewhat done it without even knowing about dollar cost averaging, buying in at intervals and watching the chart. I don't do the automatic thing, but that's because I'm not as beginning, but that's what I would do if I was beginning out again and taking someone's advice like this, I would set it, whether you're $500 or $100 a month or weekly, and just buy in that way. Then you won't feel like you're missing out at all, and you won't feel bad if the market starts dipping, because you'll know that you're dollar cost averaging your way in. So guys, thank you so much. If you did like this video, please subscribe and hit the notification bell. And also, don't forget to like this video and hit that thumbs up. Go smash it right now. And follow me on Instagram if you have not done so already. I post there pretty much daily. So guys, thank you so much. Also on Twitter. And go see the links below. Get your 10 free dollars. If you do want to sign up for Coinbase, go ahead and use that affiliate link if you want. And hope you have a great rest of your day. Take care.